So stable coins, you can't move here, or actually many conversations today in the financial industry without talking about stable coins. For us and for me, stablecoin is the big unlock for fiat to become global, instantly settlable, that's a new word, 24/7 at low cost. Right? To use a tangible example, this is a real example. 2 weeks ago, I did a transaction in the US. The transaction settled in US dollars. The money had to land into my account in Singapore. On fiat rails, they said, oh, it'll arrive in 3 days, 3 business days, whatever. Fine. If I had used a stable coin to settle it, 2 minutes after the transaction went through, the stable coin could have settled into my wallet, wherever that was. I think when you unleash that capability for fiat to be globally available 24/7, settle instantly at super low cost, layer on that you could actually program stablecoins to execute on logic and on blockchains, you really transform how you can think about the things you can do with money when you do that. Right? At the Singapore Fintech Festival, for many years, the regulatory dialogue, the industry voice, the market participant voice, I think have been a big enabler for regulators around the world to kind of move their regulation forward in Singapore, in Dubai, in Europe, and the MiCA. And now the big unlock in the US with the Genius Act. I think that's really the sort of my views on, firstly, stablecoins and how events like SFF can really move the conversation forward and move the industry forward. So the first thing I'll say as a bank and as a financial institution serving our customers, we are primarily driven by bringing the best technology forward to deliver the fastest, most efficient, cost-effective ways for our customer to move money. We have done that for the legacy financial system, as you call it, for fiat rails. We've built a layer that takes away the T+2 complexities. Once you join Banking Circle, you can settle 24 currencies, 24/7, real time, instantly, on the Banking Circle platform with counterparts that are on the Banking Circle platform. In the same way, stablecoins, as I've said, like if you start settling fiat in stablecoin formats, instantly global, right now it's not an either or. I think for now we're talking about the slow adoption that is starting now, accelerating now with regulatory clarity. And really we see the two interoperability exist with banks like us who can kind of bring all that together under one regulated roof. When you operate on fiat system, obviously it's well known. We're a cloud native bank. We've built a tech layer to settle fiat. We've integrated to multiple local clearing systems to clear fiat in real time in UK, in Europe, in Australia, in many different countries. In other countries, we work through a correspondent banking network to settle fiat and establish that. When we look at blockchain rails, one of the foundations of blockchain rails is we need to build a wallet infrastructure to hold digital assets like stable coins, to move digital assets, to convert digital assets. That wallet infrastructure needs to integrate into what we think ultimately might be 5 or 6 major chains, could be public, could be private, that then we enable transactions to flow through for our customers. And then obviously then there's all kind of AML, KYC tools that we need to deploy in the blockchain world, which is slightly different, that allow us to kind of safely transact and meet our AML, KYC obligations. So in many ways, there are these two infrastructures. Our role as the bank to make that seamless to the user layer, like the user experience doesn't need to grapple with the complexities of wallets and keys and etc. The experience layer needs to be the same experience layer they have today. Oh, here's my asset. I want to move it. I want to convert it, and really abstract away complexities of dealing with financial rails, multiple financial rails, in the same way we've done that with fiat. We're a regulated financial institution, right? So for us, regulatory compliance is by far one of the most important considerations when we think about what services we offer to our customers. It's a non-negotiable, right? So with that lens, we think the unique advantage Banking Circle has is everything we do will have a bank grade security, compliance, regulatory standard that we have to operate to, that we're obligated to operate to. And I think that is really our unique position. Our infrastructure layer, what we bring to market, will by default meet a very high standard of some of the most, I guess, high quality regulators in Europe, in Singapore, in other jurisdictions that we expand into. So we were the first bank to launch a microcompliance stablecoin last year. We saw a clear, and actually today, even to this day, we're the only bank that's launched a stablecoin in the euro space. We saw a gap in the market where, as I said, a highly regulated banking institution can launch a stablecoin in the market and deploy that across use cases. So number one, we think about it in terms of where are the gaps in the market and what are our customer needs. We're primarily driven by our customer needs. We're also a reserve bank for many other stablecoins. We don't see a conflict there. We think we're pretty early stage. And as I said, as a single house who can offer fiat solution and digital asset solutions going forward, we think that we're in that stage where, like, fundamentally, if our customers want solution, another stablecoin versus that, like, we're kind of like the infrastructure layer. We will make the best solutions that our customer asks for available to the market. Regulation, particularly for banks like us and other regulated financial institutions, regulation is the great unlock. As I come back to, for a while now, institutions like us, as soon as there's been regulatory clarity, we've leaned in, like Mika. What we see in the market is now that we've got the Genius Act, the Clarity Act expected to come soon, banks can move forward with confidence, right? With confidence and with clarity. Okay, the regulation is there, we move it. So what I anticipate is over the next 12 to 18 months, many banks who've been kind of watching, observing, experimenting internally or doing POCs will now transition into, okay, we have some of the biggest regulators in the world, like it or not, US, Singapore, UK, Europe, Japan even leaned in and clearing the pathways for us. And so I think that's why you will see a real uptick in momentum and adoption of some of these new technologies. The big topic is, in some of the biggest financial institutions in the world, the BlackRock, the Franklin Templetons, to some of the very small companies here in Singapore like Open Eden and Philip Securities and others, are moving assets on chain. They've started that early step, moving assets on chain. The problem statement is the same problem statement. When you come to fiat, there's a lot of friction, there's cut-off times, there's banking hours, there's T+2, T+3 settlement issues. And stablecoins are the process of creating an on-chain version of fiat. As I mentioned, really truly unlocks a different paradigm for how we think about moving fiat. When you come to financial instruments, all the problems of moving fiat are compounded when you're trying to move a US Treasury or a Eurobond or a Japanese government across borders. I mean, that's a whole different level of friction that kind of almost doubles up when you get to the security layers. which is why I believe you're seeing this huge wave. Okay, if you can move other financial instruments on chain, as I've said, unlock it for 24/7 settlements globally instantly, you now need a fiat leg to settle against those transactions, right? So if securities move one way, fiat needs to be the other way. But if you're going to do that on blockchains, then a stablecoin or a fiat representation of that on chain is really the only way to do it right now, right? So I think that the predictions are trillions and trillions and trillions on chain. I think that's where blockchain technology really will evolve into that next iteration of financial rails, where you'll see like huge exponential levels of activity being unleashed because you can now do things 24/7. Still very early days of tokenization. We Tokenization still lives in what I call the twin model. There's an asset in traditional custody that is on chain. There are also some interesting structures around SPVs in faraway jurisdictions that then you create a token on chain. So I think we're still very much in version one of tokenization. I do think we'll get through 2, 3, 4, 5 iterations still to come, but I'm a complete convert, so I think that the inevitable journey of assets moving frictionlessly 24/7, in whichever technology enables that, is really a good thing for the industry. As a bank, as I've said, regulatory compliance is non-negotiable. The way we think about institutional DeFi is, firstly, whoever is transacting on whichever service we're offering has to be AML, KYC, regulatory compliant. We have to do our due diligence. We have to do our due diligence on our customer, source of funds, where funds are moving to, etc. In my mind, when we start talking about DeFi, it's ensuring institutional DeFi is the transactions or the financial activity that is going on within the banking circle ecosystem is all with regulated institutions, regulated players, whoever our counterparty has also done the same level of diligence that we've applied to their customers, so they're transacting together. As soon as it gets into, hey, this is we don't know what's going on there, and anybody can act, firstly, it's just something we cannot do. We're a regulated financial institution, and so that's how I think about institutional DeFi. It's AML, KYC, regularly compliant counterpart operating on public chains, which are decentralized and secured. That's institutional DeFi to me. So look, we have that today. There are restricted currencies, there are free floating currencies, and the market has adapted to deal with that, right? Like, as I mentioned, there's onshore CNY, offshore CNY, INR, IDR, Singapore. It's an inevitable landscape you have to deal with. In the same way, I feel that when it comes to blockchains, we might have the same dynamics. There will be different blockchains. There'll be CBDCs. There might be deposit tokens, stable coins. There might be stablecoin version 2, 3, 4, 5, CBDC version 1, 2, 3, 4. And as a technology-driven bank, we just have to build the architecture that can iterate very quickly through these changes and be agile and nimble. And it's like super cliche words, but that's literally how fast the world is moving in these things. But I think once there's not a single blockchain that's going to win the world, etc., it is going to be a multi-infrastructure world, and our job really is to connect them up and make the experience layer, as I said, really easy and simple. Yeah, different degrees of challenges across the board, right? So I would say after 10 years plus of crypto evolution, public blockchain infrastructure has hit a fairly high level of maturity and regulatory standards, right? So if you're going to transact on public blockchains, if you're going to integrate wallet up into your core stack, if you want to do AML KYC on chain, all those tools are available and have met really high standards of regulatory compliance. Private blockchains by default are different. There are billions, if not trillions, transacting on private blockchains. CBDCs primarily are on private blockchains. So I see the challenges being, at some level, there will be a technology challenge because, as you pointed out, how do you integrate all these, or how do you create an experience that doesn't mean it's a clunky experience when you're moving across all these different blockchain infrastructures? When you immediately start moving across different infrastructure, there are operational challenges you have to deal with when assets are moving, tracking. So that will create challenges. And actually, last but not least, one of the challenges is the amount of talent that truly understands both spaces and have the experience. I mean, today it's that can truly navigate both spaces and build the solutions. It's a massive educational process ongoing right now, and I think the talent pool needs to be built globally to kind of build the infrastructure. The short answer is no. For a while, I see a huge need to interoperate between the two. There is a view that once you've moved, or there's a tipping point at which all activity moves on chain, do you just stay on chain? I mean, actually, the data proves that a lot of people who move on chain actually don't come off on chain; they kind of stay on chain. So maybe this is a question we should revisit in 5 years and see where the world is. But for now, fiat's not going anywhere.